Hello, everyone. Good afternoon, and welcome to our midday update for Thursday, December the 8th of 2016. I forgot what day it was. Fortunately, I just remembered. I want to take you through what's happening here the last few days, the big news of today's session, and what we can expect going forward. Equities that are at an all-time high. Okay, so above these 2216s, we had a lot of buy stops lined up, and we had to take them out. Sure enough, we did. We were on board that. We were calling that the whole time. Feel sorry for anyone that got short up there, whether it was accidentally or intentionally. Man, shorts lost a lot of money yesterday. I can tell you that much for a fact. And the downside, looks like we tricked them into these 2185s, and then we started buying that level up. On this upside move from the post-Trump rally, there had to be some correction here, a retracement in the S&P. That was bound to happen. I don't think anybody was surprised by that. Okay, I know I'm not sharing the screen. I apologize here. You should see it now. All right, so this downside had to happen. Why? Because too many people are long. All right, we let those guys off the bus, and now that we had enough shorts roped in on the downside and enough longs to get out, that gives us fuel to actually rally higher to these 2242s. I said that we could probably be at 2230 to about 2300 even by the end of December. I didn't just make that up. I just thought that based on seasonality and the strength of the market, this is a 65-year chart that you're looking at combined into days and months. So if you look at correlation here on December, you could see anything after about the beginning of December is actually kind of slow. So it's surprising that the rip happened now, but you know how the market is. As you expect it, it doesn't happen. When you don't expect it, it happens. That's the dynamic of the business that we're in. After the 14th of December, though, it got really bullish. So this rally happened early. So Merry Christmas to everybody on a little bit earlier, 2 weeks early, 2.5 weeks early. So that's why this upside happened. From a seasonal standpoint, December is always a nice, strong month. Not always, but mostly a nice, strong month. Next Wednesday, we got the Federal Reserve announcement on whether or not they'll raise rates. There's about a 93% chance they do. It's baked in. The question now is it 1 or 2 notches, or is it 25 to 50 basis points? I don't think they do a 50 basis point raise. I think they stick with 25. The key news of this morning, everyone, was the fact that the ECB had a press conference and they announced their new stimulus package and what they're going to do. For those of you that don't know, the ECB is the European Central Bank. It's headed by Mario Draghi. Draghi the Downer. He moves markets a lot. What Draghi says has a lot of impact and influence on rates, on the economy, on risk assets, as well as Europe as a whole, as a region, as a zone, and the European currency. All right, so that's important, what he has to say. So what did he say? Well, I'm going to tell you what he said. They reduced their stimulus package. Basically, so on March, the package was supposed to end. They're currently doing $69 billion of bond purchases on a monthly basis. They're reducing that to 60. So this is kind of like tapering. Remember when the Fed started to taper a couple of years back, they said, we're reducing the stimulus. We're taking the training wheels off a little bit at a time, and the market should just be able to roll on its own. Well, now it's interesting because that reduction forms a little bit of a hawkish opinion at the same time the Fed's going hawkish. All right? It's not a flat-out hawkish thing because they're still stimulating, but the Fed wants to raise rates. Now the ECB is reducing stimulus. They're both on the same page that they need to tighten monetary policy, which means reduce the cash flow and try to slow down the economy. That's typically what they use it for. In all honesty, though, what they're raising the rates for now is they want to have a couple basis points to cut in the next recession. They realize that if we got a recession now, what are they going to cut from 0.25? What are you going to do? Cut 0.25%? Big whoop. Then you got to go into negative rates, which they don't want to do. It's really bad. All right, so that's what we're dealing with here. That was the announcement today. It came out at 8:30 in the morning Eastern time, and that was a press conference, and he talked for about 2 hours. All right, the last session, a few things you guys have to know here is the last few sessions on the European closes where we've had the rallies. So about 11:30 in the morning, basically yesterday, the day before, traders in Europe were getting long, and as it rallied into resistance, they would sell and close out their positions so they could head home to their families. Well, as they did that, they put downside pressure. When longs from earlier get out, these are sells, right? Sells into the market. It puts a lid on price appreciation. As of 11:30, if you went back and looked at the past 2 days, as of 11:30, once that sell pressure is reduced, the market popped. And that's what happened yesterday, all right, and the day before. And based on the day before, I told the guys yesterday in the trading room, watch for that. That could be a good long opportunity, all right? So I was geared up to get long on that. We recognized that type of trend, and it happened. Right now on the European close, it's not going to happen because it's already worked twice. By the time everyone spots it and you hear it on YouTube, it's already done. You can't really make money off that type of information. All right, that's what it was. You need to know that. Yesterday was historic. We had 50,000 S&P 500 contracts traded in 1 second. I'm going to show you that, what that looks like on a 1-minute chart. All right, it happened at about one. Oops. Where is it? I got to go back into yesterday's afternoon session. That was on the pop higher. Jeez, I really got to go back. Sorry for messing with your eyes. Right here. All right, right on this move. So we got 22.24 all the way up to 22.27. We got 3 points of a move in less than a second on 50,000 contracts. That's historic. That's the most amount of volume that's happened in the least amount of time on the S&P 500, excluding the close and the open. Because those first few seconds, you got orders queued up from overnight. It should cause that kind of price action, all right? So what you're seeing here, guys, is algos. Algos just got way too crazy. They panic bought into this thing as Russell started to hit new highs and small caps started to really rally strong. Algos panicked and they went in and started buying the crap out of this thing. And that's what happened. That's why that pop took place. You need to know it was historic on this high volume node on a 1-minute time frame. 3 points on 50,000 contracts. That's huge. That's what you call slippage. You guys know what slippage is? Imagine you're a trader that wants to sell and you're offering 22.25 and your stop is somewhere up here. Well, your short order and your buy stop are triggered within the same nanosecond. Imagine how that feels. It's kind of like a slap in the face and then a laugh afterwards. Somebody slaps you and says, ha ha. That's how that should feel. All right. Let's look at a few assets. Enough about that. You need to know that happened yesterday, though. That's kind of been the talk around the inner circles. And, you know, everyone asks what kind of effect the algorithms in high frequency trading have. That kind of effect. That's the kind of crap you could get used to seeing more in the future. All right. Slippage should not be happening on the S&P 500. All right. Slippage means in that time period, you don't have any time to execute. You just get run up really quick and you basically get hit on your order. Sometimes you'll actually get filled down here. And by the time it trades up there, you're kind of in trouble. That happens more in FX during news releases. In futures trading, it's a lot more liquid and a lot more of a transparent market. So in order for it to go a notch higher, all the inventory has to be cleared from below. So you can't really experience true slippage, but what you can experience is getting a bad fill. Short up here, you get short and your stop gets hit, and then it comes right back down on algo. It just started to chop. The traders in the room saw it and kind of were scratching their head, and I was too. I told you, yeah, I told the guys and the subscribers in the room yesterday, wow, I've never seen anything like that on the ES. I flat out said it, and I just found out it was historic afterwards. Anywho, on the daily, S&P 500, I think just a beast. It's ripping. I think we probably got another 1 or 2 days of upside. I think we finished the week strong. And then what do we head into next week? Do you guys know what next week is, the importance of it? Next Friday? Well, next Wednesday, the 14th is the Fed, yes. And then Friday is options expiry. It's OPEX. And on options expiry, there's a lot of volatility. The Thursday and Friday before an options expiry week tend to be the lows. Now, I mean, would you call this a low? I don't know. You wouldn't call it a low now, but if it went up here, you could say, hey, that could have been a lower point. So I would not advise shorting this thing for any long period of time. I would not advise buying puts. Puts are cheap right now because there's people waiting in line to sell them to you because they don't really think it's going to go down, all right? Puts are going to expire worthless. So there was a guy telling me to buy puts down here. Okay, thanks, pal. How are those puts holding out? I hope you're on YouTube today. I mean, not to be a jerk, but if you're going to go and comment on my YouTube channel telling me what to do, come back and stand the heat. Because I told you back then, hey, you know what? Doesn't mean that if it goes down, I won't be short. Everyone wants for me to find out where the market's going. Where's the market going? It doesn't matter where the friggin' market's going. Because if I told you, you wouldn't make money. What you need to know is how to pick a place to get in and do the trade. All right. As I said, I'm grumpy today. I'm grumpy every day these days. Bollinger Bands. S&P's walking up that Bollinger Band. You can see it bounce off the moving averages. We got some positive upside. Momentum's getting a little ahead of itself. I get it. Trump got elected. Everyone's all happy. The economy is going to do good. And I get that people are saying it can't go any higher. It can't go any higher. It will continue to go higher until the people who say it can't go higher say, oh, you know what? It's going to go higher. I'm just going to buy it. I tried to short it here. It didn't work out. Okay. I tried to short it here. I got stopped out. Tried to short it here. I got stopped out. I'm just going to turn around and buy the darn thing. And then when that happens and everyone starts buying it, that's where the stops start to come out. That's the last move up. They're going to get it right at the high and it's going to come lower. So when the shorts throw in the towel and start buying, then we've exhausted the up move. So don't fade this thing. Fade it. Look, I'm all for fading. I love fading trends. Fade it, but fade it on a 5-minute, fade on a 1-minute chart. Take 1 to 3 points and get yourself out of that trade. If a fade starts going in your way and you're waiting for 5, 10, 15 points, that's on you, pal. That's on you. You're going to wear that success or failure, and most likely it'll be a failure. That's S&P 500. Let's look at gold GC1. See, gold prices try to rebound yesterday with markets being strong. I doubt they have a chance to get through these 1180s. If they do, there's buy stops at 1200, then up to 1220. All right, but I don't think they get there. We got low volume on gold, and I think volume as it increases is on the downside. That's all you need to know. Stay out of the long. I respect the fact that we're getting a little bit of a divergence, and MACD's trying to cross a little bit here, but we could slip one more time lower before we try to buy it. We got long up here, got stopped out. All right, last go we got long up here on a retracement, took our profit at 1300. So we're not doing bad trading gold. I'm waiting for a buy. Just right now is not the time. Market just got faded at 43.25, just 3 ticks off of new all-time highs. It seems like there's some sellers coming in. DXY, dollar index. Let's have a look at this. We had some weakness yesterday. Today it's popped. When the U.S. dollar and the equity markets are going up at the same time, take note. All right? Pay attention to that because that's a very bullish thing. Very bullish. I think it could go up to 101.50. As it hits 101.50, however, I would probably try to see if there's a short opportunity for some more downside. I don't know if we just smash this 101.50. Next level, obviously, is 102. But watch these 101.50s. They're going to come into play soon. I promise you that much. Let's look at oil. Oil went bananas trading today. A lot of volatility. And around these 51.40s, we wanted to short, calling the 50.10 as support. We got that trade. Great. It's done. Now I think we start to resume the upside. All right. I think there's a lot of hype built into this OPEC deal. I don't think it's going to do anything for production. I think Russia increased their production by 600,000 barrels in November, only to say in January they're going to cut it by 300,000. Well, anyone that can do math knows that that's a positive 300 increase. So good luck. There's a meeting today with non-OPEC and OPEC nations. I don't think Russia sticks to their end of the bargain. I don't think anyone sticks to their end of the bargain, not just Russia. New all-time highs in 2 ticks. I'm long at the moment. I'm looking for that break. I think we got buy stops coming up. All morning, people are trying to short the market. I think we take them out and we fly another 5 points higher. We might even touch these 22.50s today at the end of the day. All right, that's oil. We'll look at that in a second. Just trying to sell off a bit, trying to work a trade here. What else do we have to look at, guys? We looked at gold. We looked at oil. We looked at the S&P 500. Bonds. What do you need to know about bonds? They just keep dropping. As interest rate expectations increase, bond prices decrease. All right, so stay bullish. Look for dips to buy at the moment, and don't go into the session with a bias. One of the toughest challenges I have with some of the traders here is at Trade Pro Academy is going into the session with a bias. I think the market's going to do this. The market doesn't care about what you think. All right, you shouldn't come in with a bias. You should come in with research. You should come in with knowledge of what's going on. You should come in with an idea of what events are going to impact the market. Here comes new highs, guys. One tick away. But you definitely shouldn't come in with a bias. A bias is a deadly thing. A bias will get you killed in this business. Bias doesn't help you at all. The bias should be dictated. You almost want to read it off the chart. If you can't read it off the chart, then you don't have the right tools to trade successfully. It's simple as that. All right, so that's where bias comes from. Bias isn't from some guy that you pay money online to spoon feed you trades. What happens if that guy gets run over by a bus? What are you going to do with your well-being for your children if you got used to making money off some guy's email? All right, don't look for the easy way out. This thing works. You can actually learn to trade. It's possible if you just start looking for execution and holding yourself accountable and not looking for an easy way out. All right, don't look for the easy way out for anything. Easy way out is the wrong way out. It's a sleazy way out. Let me read some comments. These algos are making you want to quit because you can't tell what they're going to do. Now it's going to get worse. You know what? These algos aren't going away. It's going to get to the point that they're going to eat each other up. They're going to cannibalize on their own revenue. There's only so much algorithmic trading that can happen. If they squeeze out all the retail traders and there's nobody to soak up their trading, then guess what? They're going to just turn on one another. Algos don't make as much money as you guys think. They do, but only when markets are volatile. When you sit through this stuff here, Citadel's not making money through this. We're doing one-tick spreads. If they start increasing volume on one-tick spread scalping, they're going to start to move the market. And it doesn't work anymore. And then another algo comes in. There's algos trained to spot algos these days. Algos seem to have the reins no matter what you're looking for. Just play their game. The advantage that you have is small size over an algo. In order to make the market do what it wants, they have to swing big positions. And when they start to get caught in their own game, they get stopped out at a loss. All right? That's what we do with order flow trading. For those of you that are just watching on YouTube, I encourage you to come and join us. Subscribe to our earn package, rather. $79 a month. We're doing an amazing thing right now. We're doing order flow trading in the futures course, and all you're looking for is this. You're looking at selling imbalances, buying imbalances, who's shorting, how many people are stuck in the filter, where the algos are. This right here is a direct read of algorithms. When there's no bars, there's no algo activity. When there's bars, there's algos soaking up liquidity. This is what we call hidden liquidity. All right? And we don't know about stuff like this. Good luck fighting them. Can't fight them if you don't know what they're doing. There's use, Barbara. There's a lot of use and a ton of money to be made. And what we're doing is that, right? We're reading order flow. You just have to use new tools. If you're looking at candlestick charts, good luck making that kind of money. If you start looking at some order flow, then you got a shot because you're looking at what matters. All right, YouTube, farewell. I do want to invite you to take our futures trading course, and you're going to learn a ton of things. You're going to learn how to read this. I'm going to show you another example. A lot of traders tend to think, well, how do I know what's going on? Like, you know, I don't have the same advantage as these algos. Look at this. I'm going to show you something. Every single contract that's placed in the market, moved, changed, or canceled, I could see right here. Okay, it's moving fast because I took off the filter, but if you put the right filter, you could start to see only when size starts to come in. All right, that's what we teach you in the futures course. Imagine knowing where traders are putting their stops and making money while other people are getting stopped out. That's what you learn in the futures course. Imagine finding a location that you buy that you only take 3 ticks of heat, 3 to 4 ticks against you before it rips 3 to 4 points. That's what you learn in the futures course. You learn how to position yourself with the big money, not against it. All right, check it out. Go to tradeproacademy.com, sign up for the earn package, and you could join in. We've done 3 live lessons. They're all archived. We do live trading as well. I think there's a lot of benefit for you guys to watch how futures are traded, see it in a live trading room, and hopefully even apply it profitably yourself. All right, YouTube, bid you farewell. Have a wonderful session. Careful out there because shorting this isn't going to pay you. Not until everybody that's short throws in the towel. They haven't done it yet, as you can see. All right, we're coming out of the gate strong today. We're going to probably keep pumping. 2250 is my target for the day session. Right now it's 2244, so we're going to get there. All right, any questions from YouTube? Can you guys actually ask questions? I'll turn it on. Let's see. There's a few people still in here, but not as many questions. Check out the earn package. Email us if you have any questions, and our education is designed to take the individual retail investor and give them a chance to be a professional trader at a low cost, and also with tools that you won't find online. I think the kind of stuff that I teach, you find 1 to 2 people out there that actually teach it because it works. All right. Because if you need to find that info, you got to go get trained at Goldman Sachs to trade like this. But I'll leave it there. There's a few guys doing it. I'm one of the 2, and I know the other one. Put it that way. All right, guys. Take care, YouTube. Have a wonderful day. Careful session out there. Manage your risk. And I'll see you on our next midday update. Right now, got to be long S&P. Got to be long oil. But be careful because oil volatility is high. So just take smaller trades. Don't look for big wins. Take smaller trades and take smaller wins more regularly in this type of market versus trying to call the next 30, 40, 50 handle move because you're not going to do it. Promise you that. Take care. Goodbye. All the best. I'll see you in our next midday update.